Here on the Transparent FX Academy, every day I share my educational market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the market. So without further ado, let's jump straight to the charts and see where we can be looking for the next potential opportunity. In today's video, I will be speaking about CADJPY. Now, why do I want to speak about CADJPY? Because at the moment we do have quite interesting price action and structure on it. So what I will be doing is providing a complete multi-time frame top-down analysis, starting from the higher time frames and then going down on the lower ones. And as usual, we will also check what we have when it comes to the COT data, so the commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential setup on CADJPY. And as usual, I will be keeping this as educational as possible. Now, starting here from the monthly time frame, what we can see is that the market has just provided a strong impulse to the upside, followed by this correction. Now, generally speaking, after the creation of an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has a 0.382 Fibonacci retracement, which is currently lining up exactly at this area, which is that zone that we do expect this market to go and test before creating a potential rejection to the upside. Now, if we extend this level to the left, we can also notice how this has actually been a quite strong historical structure level for this market, which in fact was already acting as resistance here, again resistance here. The market then here, it respected it once again as resistance, once again as resistance, broke to the upside, turned support, acting again as resistance here. And now that the market has broken it to the upside, it is once again acting as support, and we can expect the market to create a short-term continuation to the downside before then creating the continuation to the upside. Now, going down on the weekly time frame, what do we have? Now, here on the weekly time frame, we can see a quite interesting thing. We can notice how in all this impulse to the upside, there was one candle not related to the move, which was exactly this red candle here, meaning that this red candle was acting as very strong supply and resistance. And since the market has tested here this supply and resistance, we did expect the market to reject this level to the downside. And in fact, we can see how that is exactly what the market is currently doing, and we can expect the market to provide even more continuation to the downside. Just a quick thing, make sure that you like, subscribe, and also let me know in the comments the topic for the next video. Now, if we go down on the daily time frame, we can see how at the moment the market has just provided the move that we wanted to see from our previous analysis. In fact, I spoke about CADJPY after this impulse to the downside and correction. When the market was at this level, I made a full breakdown explaining all the reasons for which, from here, we expected this market to provide this move to the downside. And by the way, this is exactly what the market has now followed in doing. And I will link in description this previous analysis, so you can go and check it out for further reference and more free education. However, in creating this move to the downside, the market has also provided a quite interesting pattern, which is basically this overextended M formation. Now, in general, after the creation of an overextended M formation, you want to see the market provide a correction to go and test at least the 0.382 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this high to this low, meaning that we want to see the market provide a correction at least to the 0.382 of the Fibonacci taken on this impulse to the downside. So overall, a correction to this zone is what we want to see here for a CADJPY. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, we can notice how lately with the last reports, net positions have been growing. In fact, we went from having 2.4k net positions all the way up to having 45.8k net positions. So basically we have seen longs getting increased from the 48k that we had here all the way up to having 68k, and we have seen net positions rise as a result of that, and at the same time shorts got decreased from 48k to 22.5k. So CAD definitely getting quite strong. And if we go and see what we have on the JPY, we can see how the JPY has melted from having 50k net positions with 63k longs and 13k shorts, all the way down to having a negative net positioning of minus 69k with 97k shorts and 27k longs. So we have strong CAD and weak JPY. Therefore, how we can be looking for a potential opportunity with students. Now, as usual, the way in which we will be approaching this is being reactive and not predictive. The monthly, weekly, and daily, those are the best time frames when it comes to the directional aspect of the market. However, when it then comes to confirmations and entries, the best time frames to wait for the confirmations are the intraday time frames, so 4 hour and lower. So with students, we will be monitoring price action on the 4 hour time frame and lower during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding CADJPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to retrace at least to the 0.382 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade them with me every day. I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also can ask me questions every single day and get the answer the same day in the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.